All right, today we are diving deep into one of the most fascinating and, frankly, controversial stocks out there, MicroStrategy, ticker MSTR. Now, this company started out as a pretty standard software firm, but over the last few years, it has transformed into something, well, something completely different. So we've got to ask the big question. Is this a software company anymore, or is it really just a high-stakes leveraged bet on Bitcoin?
This really gets to the heart of it, right? On one side, you have this legacy enterprise software business. But on the other, ever since 2020, you've got this wild financial vehicle that looks like it has only one mission: to hoover up as much Bitcoin as humanly possible using pretty much any financial tool it can get its hands on.
So to really get what's going on with MicroStrategy today, you kind of have to understand what it used to be. For decades, it had this one very clear identity, and then it adopted a second, way more radical one. It's truly a tale of two companies living inside a single stock ticker.
For the longest time, MicroStrategy was a totally legit, if not super exciting, business. They made high-end AI and business intelligence software, going head-to-head with behemoths like Microsoft and Oracle. And, like a lot of older tech companies, they're in the middle of that tricky shift to the cloud. But then, 2020 happened, and suddenly, this whole part of the business became a side note.
Yep, 2020 was the year everything changed. I mean, everything. The company's leadership made this incredibly bold decision, a strategic pivot that would completely overshadow its original business and change the company's identity forever.
And that brings us to the new plan, the big one, the Bitcoin Treasury Strategy. See, most companies hold their extra cash in, cash or safe bonds. MicroStrategy decided its main reserve asset was going to be Bitcoin. And let me tell you, they didn't just dip their toes in the water.
No, they went all in. They went all in. By early 2024, the company was sitting on over 200,000 Bitcoin. To give you some perspective on that, that's more than 1% of all the Bitcoin that will ever exist. Let that sink in. This isn't some small hedge. This is a colossal company-defining bet.
And this chart right here, it tells the whole new story. That little bar on the left, that's their software revenue. The giant skyscraper on the right, that's the value of their Bitcoin holdings. It's not even a contest. The Bitcoin position makes the software revenue look like a rounding error. The company's fate is now completely, overwhelmingly tied to the price of Bitcoin, period.
Okay, so here's a super important point. You might be thinking, well, why not just buy Bitcoin then? And that's the thing. Buying MSTR stock is a totally different ballgame. You're buying into a much more complex and frankly aggressive strategy. They use leverage, which is just a fancy word for debt, and they issue new shares of stock, which dilutes existing owners, all for one reason: to buy more Bitcoin. It's like Bitcoin on steroids.
So how on earth does this strategy actually work? Well, that brings us to the core of the bull case for the stock. It's what supporters call the machine, a financial engine built for one purpose and one purpose only: to accumulate ever-increasing amounts of Bitcoin.
Now, before we pop the hood on this machine, there's one key term we gotta know: accretive. It sounds complicated, but it's simple. All it means is that an action makes the pie bigger for everyone. For MicroStrategy, a move is accretive if it increases the amount of Bitcoin that backs up each individual share of stock. That's their entire goal.
And here's how the machine runs in 4 simple steps. First, and this is the absolute key, the stock has to be trading at a premium, meaning it's worth more than all its assets combined. Step 2. While it's got that premium, the company goes out and raises a bunch of cash by selling new stock or taking on debt. Step 3, you guessed it, they take that cash and immediately buy more Bitcoin. And here's the magic. Step 4, if that premium was high enough, the new Bitcoin they buy actually increases the amount of Bitcoin per share, even though they created more shares. It's this wild feedback loop that turns a high stock price into more hard assets.
But of course, a machine like this is not free to run. It comes with some pretty massive risks and some very real costs. So now we have to flip the coin and look at the bear case, which is all about the price of keeping this machine humming.
So let's just quickly recap why people love this stock. The bulls will tell you its sheer size gives it a huge advantage. They say it's built this incredible financing machine that can suck in capital from anywhere. And most importantly, they have this optionality, this amazing ability to turn market hype directly into more cold, hard Bitcoin in their treasury. Okay, but here comes the bear case. First, that software business we talked about, it's losing money. It's not even paying for itself, let alone the huge interest payments on all their debt. Second, this whole model depends completely on the stock market wanting to give them more money at a premium. If that ever stops, the machine grinds to a halt.
And finally, the cost to service all their debt is just enormous.
And hey, you don't have to take a skeptic's word for it. This is straight from the company's own official filings. They state very clearly that the software business is burning cash, and they fully expect to have to go to the capital markets to pay their bills. So this isn't a self-sustaining operation. It needs constant fuel from the outside.
Now, they do keep a big pile of cash on hands and make all their interest payments, but again, they are very, very clear that the long-term plan is not to use profits to pay their bills, but to simply keep selling more stock. The entire business model lives and dies on their ability to keep going back to the market for more money.
So with a bizarre structure like this, how does anyone even begin to figure out what the company is worth? That brings us to our last section, trying to put a price tag on this one-of-a-kind beast. Right off the bat, you can just throw all the normal valuation tools like the price-to-earnings ratio right out the window. They are totally meaningless here. Instead, what the market really cares about are two things, and two things only. The price of Bitcoin, duh, and that premium we keep talking about. That premium is basically the market's vote of confidence in the machine.
And this table just shows you how crazy the range of outcomes is. In a bear case, let's say Bitcoin falls to $50,000 and the premium disappears. The stock price could be around $800. In a more optimistic view, with Bitcoin at $100K and a healthy premium, you might be looking at $1,900 a share. But in a full-on cryptomania, Bitcoin at $150,000 and a huge premium, the stock could blast past $3,000. It just shows how sensitive the price is to those two assumptions.
So what's the bottom line? Well, it's pretty clear. MSTR is not a stock for the faint of heart. It is a highly speculative vehicle. If Bitcoin rockets and investors keep funding the machine, the returns could be absolutely explosive. But the risk on the downside is every bit as real.
Which leaves us with the final multi-billion-dollar question. Is what we're watching a visionary company pioneering a whole new type of corporate asset, or is it just a fantastically complicated house of cards, built not on profits, but on pure market hype and the hope that they can always borrow more money? Honestly, that's the question the market is still trying to answer.